on the premise of what we heard from Howard Lutnick there, and of course what we've heard as the broader argument for tariffs is that it will return American manufacturing in some of these, long phased out sectors like textiles manufacturing, for example, back to US shores. Do you think that this is going to happen? How does this play out when it comes to creating benefit for America?
I think there's a tendency to exaggerate by this administration about all the wonderful things that are going to happen. I don't know what's so wonderful about bringing textile manufacturing or sneaker manufacturing back to the United States. I don't even know whether we have the workers to help us produce those kind of products. And they're definitely produced much more cheaply overseas. If the goal is to focus on national security, then that should be it. It should be steel and aluminum. I don't really understand the need for tariffs on autos from a national security perspective. And certainly it makes no sense to have tariffs on textiles from a national security perspective at all.
How does this play out when it comes to the knock-on effects? Because if you take a look at the reaction that has been sustained from the investment community, clearly this doesn't feel like, something that markets can just shrug off.
No, you're absolutely right. And I hope that the message that the stock market is sending to the administration is being heard. The market's giving a big thumbs down to this tariff policy. I hope also that there'll be a big political backlash. I'm hearing that senators and representatives in Congress are getting flooded with calls from people who are complaining that their stock portfolios are going down. A lot of baby boomers are retiring, and they're boarding cruise ships and watching their stock portfolios on their cell phone, and they were very happy when stocks were going up to record highs, and now they're getting quite concerned. So there could definitely be a significant slowdown in the economy, but there could also be a significant pushback on a political basis. I mean, the Republicans are going to lose the midterm elections year if they don't do something to defang this reign of tariffs.
Reign of tariffs. This is shaping up to be, I think, the worst 10-week start to a presidency for the stock market since George W. Bush in 2001. And that was, of course, when we're talking about the dot-com era as well. But do you think that this really pushes back the narrative of American exceptionalism in risk assets, or is this a temporary blip? Do you want to be kind of looking at dip opportunities in this sort of environment?
Well, I think some great opportunities, great buying opportunities are being created here in the market. I mean, the U.S. still stands out in the realm of technology and communication services. The Magnificent Seven are quite unique to the United States. I know that the people have been talking about the Magnificent Four in China, but the United States does extremely well there in technology. We do very well in financials. I think our industrial sector is improving. But there are issues that the administration rightly is focusing on with regards to national security. That includes pharmaceuticals, it includes semiconductors, it includes the ability to produce our own steel and aluminum for the purpose of building national defense weaponry. So there are legitimate concerns, but this is way too sweeping an approach. And as the president said, he's now willing to listen to phenomenal offers from people on the other side of the table. And I think he's going to back off. I think he's going to back off in a way where he could declare his victory. He'll get some concessions from our trading partners, and let's say that's good enough. And hopefully this whole thing will kind of be behind us within the next 3 to 6 months. Maybe that's too optimistic, but I'm hopeful.
3 to 6 months still seems like a long time for confidence to drop and then sort of stay entrenched at lower levels, right? How resilient do you think, household sentiment, corporate sentiment is going to be, given that even going into this prior to the tariffs being announced, we've already seen a lot of preemptive, reorganization of supply chains?
The administration keeps talking about the trillions of dollars that are being committed to build factories here. We've had a factory building boom for the past 2 years because of Biden's stimulus to onshore. And I think what the president is trying to accomplish to bring more onshore without the government providing any incentives other than maybe threats that if you don't come here, you're going to have a tariff. But, you know, these are kind of not exactly legal commitments. It's companies publicly stating that they have an intention to spend a lot of money. Meanwhile, if confidence continues to drop on the part of CEOs, they're going to cut back on capital spending. Same thing with consumers. If their confidence continues to drop, they'll retrench. The really odd thing is we're going to have like a very weak first quarter. Then we're going to like a really strong second quarter because people are already scrambling to buy cars before their prices go up. We had a big surge in car sales in March, so we could have a strong April, May, and then everything could fizzle in the second half of the year.
Your own risk of stagflation and recession are about 35% and 45% respectively. There are some others that feel a little bit worse about it. JP Morgan sees a 60% odds of recession. How do you view kind of that trajectory and also the implications for the Fed, right? Because it sounds like, and I don't blame them, the Fed also is being very careful in terms of how they maneuver the next few months.
Well, you know, there's a lot of nuance here. I hear that a lot of the economists, some of my competitors, are now saying there's a better than 50% chance of a recession. They say if the tariff situation isn't ameliorated in the next few months. And I agree with that. If things are as bad on the tariff front in 3 to 6 months as they are now, then sure, we'll have a recession. But I think there will be a political response. The Republicans don't want to lose their majority in the midterm elections next year, and they have to think about that. If they cause a recession in the second half of the year, that's going to linger in terms of the kind of the bad feelings that people have towards Republicans. So I expect that there will be a pushback. I expect that 3 to 6 months from now, there'll be other issues to deal with. So I'm expecting a slowdown in the second half of the year, but not an outright recession. I would say 45% is my number for the risk of stagflation and or including the possibility of a mild recession.
Do you have targets in mind when it comes to the S&P 500 and the NASDAQ?
Well, they keep, I keep changing them. I had the past 3 years. It's kind of nostalgia. I had a really great run in forecasting the economy and the stock market. I started out the year optimistic, like most, but I was near the top of the range with the S&P 500 at 1,000. I was arguing earnings would be really strong, and the valuations in that kind of environment could stay up. But over the past, well, really since early March, I've been kind of fading away. And I went from 7,000 to 6,400 a couple of weeks ago, and then a week ago I went to 6,000 on the S&P 500. So I'm changing my mind as often as the president is changing his mind.
Just trying to keep up, right? Given there's so much uncertainty when it comes to the US economy, US assets, are you tempted to diversify elsewhere? I mean, there was one argument that Chinese assets might be the ultimate diversifier in this environment.
Well, I'm more inclined to think that gold is the ultimate diversifier. It's been a fairly steady appreciating asset. Other assets have kind of fallen by the wayside, including Bitcoin. I'm skeptical about the China story. I know that the stocks have done very well of late, and there's been a move to Chinese technology, but those stocks have come down along with the Magnificent Seven recently, and I question the ability of the Chinese government to really stimulate their economy when they still have an awful property situation where real estate prices are still depressed. There's still a huge negative wealth effect in real estate. And then there's also the geriatric issue. It's a very rapidly aging population. So put it all together, if you try to stimulate consumers, that's fine, but you have to factor in demographics. Old people don't go anywhere. They don't travel as much. They don't have kids. They don't have they don't have family to spend money on, and so it's conceivable that consumers, if they're given some breaks here, will save rather than spend, or at least they won't take advantage of the incentives to buy cars and appliances that the government's providing. So I'm skeptical of that story.
The geriatric dividend, or the lack thereof. I wanted to go back. I think your latest target on the S&P 500 was 6,000.
Yeah.
What is it now? Just for now, as we speak. You're welcome to change your mind in 5 minutes if there's another headline. And also for gold. Where do you think gold is going for here?
Well, I've never been a gold expert. I'm still not a gold expert. I'm an old-fashioned strategist. I like to have dividends and earnings and coupons and income streams to discount. But just kind of looking at the charts as an amateur technician, this I think has the potential to actually get to 4,000 by the end of the year and 5,000 by the end of next year. But that's within the context of ongoing global chaos, which seems like a reasonable bet given the have been unfolding of late.
Would you buy the Mag 7 at this point?
Would I what?
Would you buy the Magnificent 7 or any of the Magnificent 7 at this point?
I think they're still magnificent. It's ironic that, a few months ago, everybody was talking about American exceptionalism. Sometimes when anything becomes a consensus view, and I think it even made the front cover of The Economist in October, that America's economy was clearly better than anybody else's. And wouldn't you know it, ever since then, everybody's lost their interest in the idea, or they kind of question that idea. But look, we still have amazing capital markets here. We still have lots of money available to fund all sorts of entrepreneurs. We have a very solid financial system. Our industrial base is really quite good. I mean, I say this without kind of political bias. This president inherited a really strong economy, 1% unemployment rate, inflation just a little bit above 2%. It was really in good shape, and I kind of question where we're going to find bodies, where we're going to find workers if we bring all these amazing jobs back. And like I said, I don't think Americans are rushing to be producing textiles and sneakers. They just as soon have those made overseas where labor is still relatively cheap and import them.